Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at Near Protocol's weekly analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my easy to understand analysis into the world by smashing the like, ringing my bell, hitting subscribe if you haven't, and sharing your thoughts in the comment section. That helps me get to know what you're thinking or if you have any questions. And also, when you do all those things, it helps you to promote the videos so others can find it and also stay informed and make more informed decisions. I would really appreciate that because it takes a lot of work, and this is to help people. So, with that, let's dive into the news first, and then we'll take a look at the analysis. In the news, we have Near Protocol now has a stablecoin called USN, and this is it's gonna be helpful for it. All blockchain should have some kind of stablecoin to help bring more money into the ecosystem. So positive news. Near Protocol's ecosystem is growing. Tonic raises $5 million to build a DeFi platform on Near. And we'll talk about DeFi and the total value locked and stuff. But this is it's gonna help expand the ecosystem. And you can read more about it here from this. It's from PR Newswire. The current crypto market heat map here, you can see it's better than this morning. A lot more greens here. Bitcoin 38.7k, dominance 42.23. Ethereum 2.8k, dominance it's rising 19.67. Overall, getting better. Market cap, total crypto market cap is $1.74 trillion, and let me zoom in for you. And it's went up 2.05. It's still pretty low, but we're moving back up, so that's good. And as far as Near Protocol, it's currently ranked number 19 in market cap, with a market cap of $7.99 billion. Some interesting fact you might want to know is that it dropped 6 positions last week. It was at number 12. Sorry, was it number 12? I forgot. No, is that number 19? I think it was 6 positions. So 13 or 12, somewhere around there. That's where it was last week. And then it dropped. No, sorry. Yeah, I think it was at number, yeah, something like that. I don't remember, but it dropped. Here's the very busy chart. Here's the current weekly chart for Near Protocol. Let's go through it. Let's expand it first. We have, last week I mentioned in my analysis that Near Protocol would chop between $13.50 and $15. It did do that. You can see in this candle, this tall candle here, $13.50 would be this red line here, and $15 would be this line here. Chop between there. I also mentioned that if it breaks below, sustain a break below this ascending triangle support, it'll drop hard. And it did. It broke through this support line here, and it dropped all the way to, what is it, $10.10. And then it pulled back to 1181 when I prepared this chart here. Additionally, Near Protocol dropped below the bull market support band, this gray ribbon here, and that bull market support band has a price range of $12.94 to $12.21. And you can see that it printed 4 bearish descending weekly candles. And then the current one here, this which is new today, it's slightly bullish, but super very thin body. So with this tall body candle here from last week, it broke the ascending triangle support. It broke the 1350 support. It broke the bull market support band, and then it broke the $12 support here too. So pretty bearish movement last week. And now it's in the bearish territory because of breaking all those levels and being below the bull market support band. And the good news, though, is still above the 50-day moving average, which is this pink line here, which happens to also pretty much is in line with the higher lows trend line here, that white dash line here. So it's above that, which is, it's still got, it's still pretty good because it hasn't been below that in a long time. It's like going back here, this is July of 2021. Additionally, there is a near protocol could be painting a double top pattern. Let's go through it. Here's the first leg going up. Here's the top. First top drops all the way down, goes back up to this. You may not be able to see this wick here, but it's there, and then drops back down. So if it drops back down to the neckline, that could be interesting because it would have to break all these support levels here at $10. This higher lows and the 50-week moving average, not 50-day. So breaking all those, it could drop back down to the neckline, and if it breaks the neckline, that's extremely bearish. So pay attention to that double top bearish pattern here. Where's where the current candle is at? It's just above the highest volume traded price zone, which is right this red solid line here going across, and that is roughly around $10.62. The daily volume for the last 5 weeks, 4 of the 5 weeks have been above the moving average. Only this one here on mid-April, it was just slightly below. The current volume is new, so we don't really know. It's not an accurate representation yet. Down below, we have the white J line of the KDJ dropping below the blue K and the red D lines, and it registered at 26, which is just slightly above the start of the lower range, which starts at 20. I gave that a bear. The white MACD line dropped below the red signal line at 1.18 and printed a new bearish histogram bar. Is the first one after 1, 2, 3, 4, 5 pretty thin histogram bars here of more bullish histogram bars. So this is the first bearish one. Gave that a bear. Down below we have the red RSI and blue CVD. They leveled off after descending for I think about 5 weeks. 1, 2, 3, 4, 4 weeks. So after descending for 4 weeks, they leveled off, going horizontal. And the red RSI line is at 50, which is the middle mark for RSI range. The blue CVD line is at 522 million. And I gave both of those indicators crab and a bear, because currently they're crabbing sideways, but their trend has been bearish. So we want to keep that in mind. The white momentum indicator, this white line here, has been choppy, going sideways, and currently registering at 3.42, and I gave that a crab. If you combine all these indicators together, it's telling us that there's bearish pressure. You can see here KDJ is bearish, MACD is bearish, and the RSI and CVD, they has a decent bearish trend in the last 4 weeks, but now it's currently going sideways. So bearish crab. So bearish tendencies, but potentially it could be chopping sideways in this range here, right between $10 and $12. It could chop right between there. If it breaks above with bearish indications due to these signals down here, if it breaks above the bull market support band, this gray ribbon here, then it'll be more bullish. If it breaks below these support levels down below that I've mentioned before, then it's bearish. But it's even more bearish if it breaks down towards the neckline here. But first, it would have to break the higher lows trend line and the 50-week moving average. So keep an eye on in this zone here. Let's go through the so overall I gave it 2 crabs because it's going to be choppy, and a bear because it's going to have bearish tendencies. Total value locked is number 18. Oh, sorry. Earlier I mentioned that the market cap, the ranking is accurate. It's the total value locked that dropped. Total value locked currently is nears at number 18, and it was at number 12, so it dropped 6 spot. It was up here, dropped 6 spot, and TVL is currently 466 million, and you can see here 7-day it went down to 3.69%. 1 month change is still up just above 85%. The market cap to TVL ratio, this number, the lower the better. It went now is at 17.36. That is the highest among the top 20, and we don't want high, we want low. Make sure I got yeah, that looks good. Here's the graph of the total value locked for near. One of the better charts here is still rising, but you notice it's consolidating at the top here. But unlike the other ones where they peak at near the middle and they drop down. Here's the heat map for near protocol. At the top we have sell walls. At the bottom we have buy walls. Big sell wall here at $20 and little ones here at 17 and 15. Down below we have buy walls. We got one at 10, 9, 850, and a big one at roughly 220. You can see some light ones in between too. Currently in this range, we have more aggressive sells, market sells. That's what these red lines are, and you can see the meter here is almost maxed out. So aggressive sells are market sells at market price. And if it's a limit, then that's different. That's not aggressive. Where they set the limit price, be either for buy or sells, and then they wait for that price to get filled. Here's the liquidation levels map. We currently have an excess of shorts, and it's roughly $23 million. Not a big deal. These only count 20x to 100x high leverage. Don't ever do those positions. You will get liquidated. Not suggested. Yeah. Anyways, it's getting late and I'm getting loopy here. Basically, we have high leverage short positions up here, the money in them, the open interest, minus the long, the amount of money in the long positions down here. You subtract this one from this one, and you get this one. When it's negative, it just means excess shorts. And this is the cumulative liquidation levels delta. Delta just means difference. So it's not going to change the price as far as someone taking account of position and influence the spot market. So just for your information, there's more short money in shorts right now, high leverage shorts. Why it's not moving? Oh, because I canceled it out. So that pretty much covers our analysis for near protocol for the weekly chart. I hope you enjoyed it, and I hope you learned something or appreciate it or find some value. Feel free to smash the like. ring my bell, hit subscribe if you haven't, and share your thoughts and comments in the comment section. All of that will help spread the analysis for others. It's my last video, and I'm tired. I'm gonna go to bed after this. So I'll see you in the next video tomorrow morning. Peace.